Okay, you guys, I am sorry. I apologize. We just started up a whole nother live, and I got Denise right here on the phone. Denise is with Penny Mac, and she's an account executive. She's a go-to whenever we need some problems, whenever we have a loan application, we need a file pre-approved. She's the go-to person to help solve problems and get everything squared away up front in order for us to be able to move forward. So with that being said, you guys can come on in. I'm gonna pin the link on the chat, so therefore you guys can be able to come up on the panel and ask your questions. If you have any questions, feel free to come on and ask questions, or you can ask questions in the chat. Let me just give you guys 1 second. Uh, Denise, I'm gonna.
Yes.
Okay, so here I'm gonna introduce yourself.
Hello, I'm so sorry. This is Denise Jackson at PennyMac again. PennyMac is one of the 200 plus lenders that Satanya has to work with when finding a home for your new home loan. You've got an excellent partner in Satanya because she does have so many connections, and every lender is going to be a little different. Keep in mind that your credit score is going to determine the interest rate that you get on your new home mortgage. So some things that you want to keep in mind are that we don't want you guys to go out and buy new furniture or a new car before you close your loan. So please wait and do all of that after you close. I'm sure Satanya has a list of things she does not want you to do during the loan office, during the underwriting process. But again, so that's one of the biggest things. We require a 620 credit score when you're looking at conventional loans, and 580 credit score when you're doing a government loan. Government loan being an FHA loan or a VA loan. If your scores don't meet that, then you wouldn't qualify to come to PennyMac, because Tanya has other options for you. But based on your credit score is going to determine the rate that you're going to get on your new mortgage. So the better your credit, the lower your rate. Keep that in mind. And if you have funds to put down, your interest rate will be better than if you take the maximum financing, say 97% on a conventional or 96.5% on an FHA. Some other things that Tanya wanted me to bring up are credit disputes. If you have disputed items on your credit that exceed $1,000, your loan may have to be downgraded to a manual underwrite, which has stricter guidelines on your debt ratio. And your debt ratio just means for every dollar that you make, the lender may not want you to have more than, say, 50 cents going out in debt. So keep that in mind, that it could prohibit the amount that you're looking to finance. Let's say you approved for $300,000, but your debt ratio is a little higher. Now maybe she has to reduce you down to $250,000 because you have to go to manual underwrite. If you don't qualify for a manual underwrite, you will have to pay, remove those items from dispute and then repo credit. Now, when you do that, your credit score will change and it typically goes down. So just keep that in mind. You don't want a bunch of items out there disputed thinking that they're not going to count. They're going to count, and they're going to count against you. So just keep that in mind. We already talked about don't take out any new debt. That's one of the biggest things that you guys can do to hurt yourself, is take out additional debt. Or don't tell Satanya that you've taken out additional debt, because the lender will find that out and then come back to her and say, hey, what's going on? These people just bought a car. And then she's looking silly because she doesn't know the answer.
Oh,
So,
hey, Denise. I was I was wondering about something, right? Um, I run across a lot of this disputed items. And I don't know, I'm not sure what people are being told, the reason why they dispute accounts. But can you just elaborate on how you guys review disputes and what the guidelines are now in regards to disputed items that's on the credit report?
The guidelines state that if you have any items disputed that exceed $1,000, you either have to be manually downgraded to a manual underwrite, meaning, again, your debt ratio, there's going to be more qualifications. You're going to have some extenuating circumstances as to why your credit score is what it is. You're going to have to explain every time someone has pulled your credit why. There's just so many extra things. You definitely do not want to have a manual underwrite. Your file would take forever to get through. And if you don't qualify for a manual underwrite, you're going to have to go in and undispute all those items and then ask to have your credit report, which ultimately ends up costing you more money. So just keep that in mind.
And when we have to go back and repull, can you elaborate? I wanted to share with them that when you have to undispute something that has been disputed, that means the credit score is going to go down. And so, because let's say, for instance, because we require a 580 credit score on an FHA file, and let's say that you have a 585, and let's say you have three items that needs to be undisputed. That means that that credit score with whoever those that account is disputed with, for example, Experian, TransUnion, or Equifax, then that company, all three of those companies has to undispute that one account, and all three of those scores are going to drop. So that can is possible that once because you were above the 580 credit score and was able to get qualified, pre-approved, but now because you had to undispute those items, okay, that means that those credit scores can drop below the 580 requirement, which can make you have to uh, work on getting your credit score increased again by paying down some debt, paying off some debt to get that score up. So the reason being is because disputed items increase your credit score. When people go and dispute things on their credit, it normally increases the credit score. So the lender wants the true and accurate credit score because they want to make sure that they're doing business right and they're dealing with an accurate credit score so that they can loan money in regards to the particular file. So this I've talked to several underwriters today with several different companies, and this is pretty much across the board. Um, Keep in mind, she said at least that disputed items that are above $1,000. That means the total. Okay, the total amount, if it add up to $1,000, let's say you have one item that's $300, you have another item that's $700, right? So that's $1,000. Okay. But if you got another item that's $4,000, then that item need to be undisputed. Okay, because you still got the 300 and the 700, that's $1,000 by itself. So would that be able to pass, Denise? I'm just breaking it down for an example wise.
You can if you initially submit with over $1,000, then it's automatically going to be reduced to a manual underwrite, even if you decide to undispute that one item, because when you initially applied, you had over $1,000 in disputed items.
Okay.
So you would definitely want to get the dispute removed before you submit your loan.
Okay, so before they take a loan application at this point, right?
Correct.
Disputed items need to be undisputed before they go through the process of taking a loan application and pulling the credit. So let me ask you this. Is it safe to say, what if they did it years ago and they forgot all about it, right? If is it huh?
Did a dispute years ago?
Right.
Well, a dispute will typically only stay on your credit report for 90 days.
Okay.
If you disputed, and the reason for that is for a dispute is, let's say that someone else used your credit card and you're disputing some charges. It's not going to take years to resolve that. That typically will be done within 90 days. So that dispute will then fall off after that time frame.
Okay. And just so they can hear you a little better, what I'm gonna do is I'm gonna dial you from my other phone and put you on speaker, okay?
Okay.
Okay. Hold on. I just want to make sure you guys could hear this because um, this is something that just seems to be popping up. Okay. Can you hear me? Okay. Okay. All right.
You know, another thing that I did want to bring up were your reserves or your down payment funds. If you are using your funds for the down payment, not a gift, do not move those funds from one account to the other. That will make a nightmare for Tanya and proving where that money came from.
Okay.
What the underwriter wants to see is that you have the funds for down payment in one account, that the money has been there for at least 60 days.
Okay, so what she's saying, you guys, okay, so the underwriter is a little funny about lump sum deposits and transfers, okay? So I know we do understand that it is tax season and there is gonna you might have a direct deposit. So anytime the direct deposit, there's a lump sum deposit that enters your account and it's over 10% of your sales price, it does have to be explained. So with the underwriter, because it's tax season, if it is tax money, you can utilize it. But if it is the fast cash, you cannot utilize that for down payment or closing costs because it is a loan. That money comes with an interest rate. Um, Back to what I was saying about the tax refund. Then the underwriter is going to want to see a copy of your tax return to show that that money came from your tax your 2023 tax refund. Okay, uh, the funds came from the fact that you filed your taxes. They want.
And if it's direct deposit from the IRS, it will show in your bank account that it came from the IRS.
Mm-hmm. We do understand that around this time of the year, especially around this time of the year, there's all kind of funds that's being like you might have student loan money. Student loan money cannot be utilized as down payment or closing costs. If it shows up in the account, then the underwriter is going to subtract it from the amount of funds that you can utilize for closing costs or down payment. And the reason why they're going to do that is because student loan is money, it's government money, and it's tied to an interest rate. Denise,
as well as the payment needs to be applied towards your debt.
Right. So that's another loan that's going to pop up on the credit report. So they're going to want to know what the amount was, because we have to if there's not an income-based repayment letter in place, we have to calculate that 0.5% against that balance, and then there's another liability another debt that's going to show up on the credit report, and we're very aware of that, and then we got to add that into the ratios. Do anybody have any questions? If you want to type a question or come up on the panel. Okay. So keep in mind now, disputed items, if you guys have Credit Karma, okay, the way you undispute an item is you call that particular account, that creditor, and you just ask them that you want to undispute the your this Denise. You do that? Do they want to ask that they just want to undispute this account to get that get the dispute off of their credit, off of this account? Okay.
Yes.
From every bureau that they're reporting to with this particular account.
Yes. You want to
Okay.
reach out to all 3 credit reports.
Okay. So basically, what you're gonna do is you're gonna call. Let's say you have one with, let's say First Premier, let's say Santander, and let's say some jewelry company. Okay, and you're gonna call the jewelry company. You're gonna call Santander, and you're gonna call First Premier, and you're going to tell them you want to undispute the item that's on your credit, so it won't reflect dispute on your credit report. And you need them to contact all bureaus that they report to so it can be undisputed. And also, if I were you, I would ask for a record, something, a receipt showing that it has been undisputed, so that you can have something in writing. And then once you have something in writing, you can provide that information to us, because what's going to happen is we are going to have to re-pull the credit, and we got to give the credit service company something showing proof, and they're going to want to verify it, but something showing proof that you have undisputed this item. And then um, we have to, get a, well, I don't know. Some companies, Denise, some companies does not report every month, right?
Correct.
So would it be safe to say for us to wait on them to undispute it before, because they're going to need to undispute it, and that way we won't even have to go through the process of re-pulling credit, because we haven't pulled credit yet. We're showing them how to go through this process before they start on the application, right?
Correct.
Okay, so if as the credit card company, how often do they report, and how soon can they have this done? And they'll give and ask for a window of time, and that way it'll already be done by the time we pull the credit report.
Correct. So they will definitely want to ask the creditor, how long is it going to take before that information is reported? Because you'll want to make sure that you get an accurate credit report when you pull their credit. Otherwise, you're going to have to ask them to pay for credit again. And the cost of your credit report is what, $88 each time you run it if it's a single report?
Well, you know what?
About right?
I'm gonna tell you, they went up. If it was $65 as of December 31st, but they just went up January 1st to $72 with us, with the credit vendor that I use. But I talked to another loan officer, and she told me their credit reports cost $155.
Yeah, they're not cheap, that's for sure.
Yeah, and so you guys, I wanted to make sure that I relay this information, and I'm gonna tell you why. Because there's a very high percentage of credit pulling that I do on a daily basis, right? So with that being said, over 50% of the credit reports that I review has disputes on them. So I wanted to make sure that I got the information out there, because I do know that there are people that's out there telling people dispute, dispute, dispute. Okay, now I know that the credit repair people, they do all of that. But here's the thing, this is one of the reasons why things have come to this, because the backstory. I stay in touch with a lot of my friends over the 25 years I've been doing this. And I had a conversation with one of the underwriters that's in Georgia. And we talked about how, a lot of the companies are having to buy back their loans that they've loaned money on, because once the loan sold and it got audited, then the company decided that the file wasn't worth the money that they spent because of the things was not presented properly regarding the credit report. So they packaged the file back up and shipped it back to the company that closed it, and they had to buy it back. So that's one of the reasons why we're here now. But I want to make sure that you guys understood that, hey, go ahead and undispute all of your things. Okay, if the credit score goes down, guess what? I'm going to show you how to build the credit, get the credit score back. There's a few things that can take place. You Small credit cards, let's say they have balances like $500, just pay those items off, or pay them out, you know close to being off. That way it increases your credit score. If there are some things on the credit that try not to be late on anything, especially at the time of the loan application. I've been seeing a lot of that lately, being late on something at the time of the loan application. No, you catch everything up before you take the loan application, because it's going to show us that you're currently late on something, and it's going to be hard to get approved, you know, when that happens. We are going to look for compensating factors. What are compensating factors? That's how long the history, job history, how long you lived at the current resident that you're in, uh, a savings pattern. That can include a Roth, that can include 401k, that can include, say for instance, we just because like for instance, we just ran across COVID, right? And that was a beyond our control type of thing. A lot of people made a lot of exceptions regarding like 401k plans, because they knew that this was an emergency type time. So what they did was they allowed people to just draw all of it without, it being a loan or anything like that, because there was a time, an emergency. It really was. So 401k is a savings pattern. That's money that you don't touch, you don't tap in or anything like that. This is money it's like a savings account. And the reason why we view things like this is because there's three ways that you can really kind of go into your 401k. That's to send a child to college, to pay for a funeral, or to purchase a home. Now, if you've already taken a loan out against the 401k, then that's going to be something that you guys are going to need to discuss, because the rules change if you've already tapped into the 401k and borrowed money against your money. Then you're going to need to make a phone call with your retirement company, the the company that has your money, and ask them, if you were in the process of purchasing a home, how much money will be available for you. Now, you just can't just go and, just because you're buying a house, if you've already tapped into the money, then you're going to have a conversation with them and find out how much is available, because you may have borrowed everything that you can borrow against it. Okay? So make sure that, Denise, is there anything else in reference to compensating factors that is being reviewed?
Well, one thing that you definitely you touched on it when you say don't make late payments, because just like compensating factors are going to help you, if you make your car payment late or you pay a credit card late during your loan process, the underwriter is going to look at that and they're going to say, we're looking to give these people $200,000 to buy a house, and they just paid their $50 credit card payment late, or they just paid their $300 car payment late. Are they going to pay us on time? When you're looking at a manual underwrite, that just means that the underwriter gets to input their opinion, and they're going to be looking at your past history to determine if they feel like you're going to make the payment. So that's just something to keep in mind. You always want to stay on time with things, especially during the underwriting process, because they're going to be looking at all of that. Just like there's a compensating factor, there are things that they're going to be looking at that do not compensate for giving you the loan.
Yes. Here's the things that will qualify you for the loan. I, um, being on a job or having work history for at least 2 years. I remember Denise just brought up manual underwrite. Now, keep in mind, I tell you guys all the time that um, now they don't too much do verification of rent. Okay. But when the loan is downgraded to a manual underwrite, the ratio change. When we didn't have to do a verification of rent, now we got to get your landlord information. Um, there's so many other factors that the loan is totally restructured. And so a manual underwrite can knock you out of being qualified for that particular home, especially when the ratios have to change. We definitely want you guys to understand, don't get don't transfer money from one account to another. And the reason why is because if you do, then we're going to have a copy of the other bank account that you're transferring money to. And the underwriter, we try to keep everything as simple as possible. And we try to keep everything very simple and very, smooth. Because what'll happen is the underwriter is going to go through the other bank statement line by line. And you don't want the underwriter in all of your business.
Right. And if you've had deposits, large deposits, and all you're looking for is the money to show that you put money in this account from that account, if they see large deposits, they're going to now ask you to source that. You do not want them going through your business like that, and where you got to go and show every single thing that you did.
They want to make sure that you're not borrowing money to pay on the to pay the down payment or closing. They want you, now they will allow you to get a gift. Okay. But remember, we had an underwriter on here last week, and she made mention of first payment default. So a lot of times you will need to show reserves in your bank account to just make the lender feel comfortable that you're not closing the loan with your last dime, because they want to make sure that you're going to have some money in your account to make your first mortgage payment. Denise, approximately how many months reserve excuse me, how many months reserve have you seen the most of, and what's the least reserve? Like 1 month, 6 months, 3 months, what?
Typically on your FHA loan, you don't see more than 2 months reserves, but it just really depends on the credit score.
Okay.
And your AUS, your findings. That means when Satanya takes your application, she's going to run what's called AUS, and that's when the agency that she's selling to, let's say Fannie Mae, for example, or in this case we're going to go Ginnie Mae because you're going to go FHA. Ginnie Mae is going to show her what do they want to see in order to do this loan? And based on the depth of your credit score, how long you've been on your job, all these factors, that's when they'll come and say, I'd like to see 2 months or 3 months reserves. If you're getting a large loan, I've seen reserve requirements as high as 18 months. But you're talking about, loans almost $1 million. So it just depends on each borrower. If you have to go down that manual route, that's when they start asking you for more. So if you can stay in the just regular loan, not a manual underwrite, that you fit the scorecard, you have a 620 credit score, no disputes, you're good to go, I would go that route. Because if they had to start going through everything, that's when they're going to ask you guys for so much more. Doesn't stop you from buying a house. You just got to be able to provide everything they ask you for. If you have gaps in employment, keep that in mind. Let's say they're looking at a 2-year history. You have to work for 2 straight years. If you had a gap, meaning you quit a job and you didn't start a new job the next day, that's called a gap. If there's a gap of 6 months or more, they're going to say, okay, we want you to be on your new job for at least 6 months before you can close this loan. They want to make sure that you're stable. So just remember that everything they're asking you for is stability. How long have you been on your job? How long have you been in your home? Do you have money in your bank account? So they're looking for stability.
So if you say, for instance, you change one job to another and you got a 2-week gap, then what they'll do is ask you for a letter of explanation. If it's something over 30 days, let's say you left one job, you're in the same line of work, you've been in that industry for 10 years, then the letter of explanation will sound like this. To whom it may concern, the reason why I have an employment gap is because I ended the job at XYZ on this particular day, and my hire date to start at the next job was ABC. Okay. And a letter of explanation is not good without a date and a signature. So you just keep it, to the point. Let answer the question. Don't go telling a long drawn out story that, you know, um, you know, somebody went in the hospital, this, that, and da 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 da. Just keep it to the point. If that be the reason, if you got COVID or something like that, you do explain, but you just want to keep it simple, you know, um, and sign it and send it back to us, and we can submit it to the underwriter so they can sign off on it. It's just that simple, you know. Um, but we just want to make sure that we reiterate about the disputes. I mean, it's been chaos. From I've talked to underwriter, from one place to another, and it's the same thing. So we want to make sure that um, we have you to undispute, and but keep in mind, remember, when you do that, and I know you don't want to do it, but you got to, because the credit score is going to fall, but there is a way to increase the score again. So we want to make sure that you understood that, because it has come to that. And this is that day and time now. um, Denise, it's around tax season, right?
Mm-hmm.
So for the people that have balances owed to the IRS, because this is a whole nother year, well, officially, they don't have to really file the 2023 taxes until the week of April the 15th, right? So,
correct, unless you need to use the income from 2023 to qualify. Yes.
right. So it's not pressure on you to provide the 2023 tax return, or, we're going to be looking at the previous year until the deadline of tax season. Okay. So 2021 and 2022, but we will still need the W-2 for 2023 because it's going to have your year to date, the income that you made for the year of 2023, and because you're closing your loan in the year of 2024. So, not that you have to have filed it, but this brings a change in, let's say, if a person owed for 2022, Denise,
Yes.
they are going
If
to
you
have to be on the
have
payment
tax
plan.
liens,
Mm-hmm.
you need to have made an arrangement with the IRS and have made 3 payments on that payment plan. You cannot prepay it. You have to make the 3 payments as scheduled. So if you make an arrangement yesterday and they tell you can't close until you have 3 payments made, you can't make 3 payments ahead of time. You have to make each payment and wait to make the next one. Make 3 months worth of payments before you're able to move forward if you have a balance due after you've made your payment arrangement.
So, in other words, make the 3 payments, then take the loan application.
Correct. Now, I just want to tell you, too, when you're completing your application with Tanya, she's going to ask you a lot of questions. Don't think you know the answer. Know you know the answer. Because every single thing that she puts on that application, the underwriter is going to verify. So if you say, I worked at this job for a year and a half, and you actually worked there for a year and a day, they're going to know that because they're going to do a verification of employment. They're going to tell exactly how long you worked there. So if we have to verify 24 months and you don't really know what jobs you worked in the last 24 months, you definitely want to make sure you look that information up. Have your W-2s, give her the correct information, because every time that the underwriter gets information that does not match what's on that application, they're going to ask Tanya why.
Yeah, they're going to ask another
this
question.
match?
Yeah, they're going to ask another question, which is, when we're going, see, if you're not sure when you started a job or when you ended a job, all you have to do up front is call your HR department. Or the way everything is done electronically now, you can look it up in the system, or if you had ADP or something like that, you can find out through that source.
Yeah. Make sure that everything on that application is factual. Where you live. I've had people say, I live at my mom's house, but when the underwriter gets the file and they pull what's called a LexisNexis report, they say that Tanya has been living over at 1721 Thorogood Street. And that's not her mom's address because they can see what the address was on your application. And then she says, I was living with my boyfriend. Okay, well, that didn't match what you had on your application. So that can disqualify you from doing a purchase by providing false information on your application. So just make sure everything that you put on there can be verified, because the underwriter will verify what you said.
Right. So, is there another topic that you want to cover, Denise, that we've been seeing a lot of?
Something that has come up a few times just in the last month or so.
Okay.
Is when a borrower gets a gift. They get a gift letter and their brother's going to give them $5,000 to close, and we don't get the bank statement showing proof that the brother has given you the money, and we don't get that information before we go to closing. That's what we call a prior to funding condition. Or prior to doc condition. So that just means that we're going to hold your documents up from closing until we get that bank statement from you showing that the money's there and it came from the account that you said it was going to come from. I've seen too many times lately where someone says their brother is going to gift them the money, and then the money comes from their boyfriend. That will also stop you from closing.
I got a question. How do
Yeah.
you guys know it's the boyfriend? I'm just curious.
Well, again, they run what's called a LexisNexis report,
Mm-hmm.
and they're able to see. It's amazing what the underwriters have access
Mm-hmm.
to.
Mm-hmm.
They know who your relatives are. Based on this information, they'll tell them the possible people that you're related to. And if Tyrone Smith is not one of your relatives, and that's the guy that gave you the money, but you also had to give a gift letter before that telling us who the money was coming from. And that needs to match the bank account that it came out of. So we know for two reasons. One, that wasn't what was on the gift letter. And two, they ran a LexisNexis and they can see who your relatives are.
So I was told by an underwriter, and I know some companies allow certain things and some companies don't, but I was told that a baby mama or a baby daddy could give money.
Yes. Now, they're considered family-like friends. You can get a gift from a friend, but you just have to be upfront about it to say that this person is giving you the funds. What we're finding is that you gave us a gift letter that said this person is giving you the money, and then when the money actually comes in, it came from someone else. And you look at it as, they said they're giving me $5,000, doesn't matter where it came from. The agencies do care because they can't just have some random person giving you money, and we want to know where it came from.
Because it could be a loan.
They have to sign a gift letter saying that this is not a loan, we're giving you a gift, and it needs to come from the account of the person that wrote and signed that letter.
So let me tell you guys why it can't be just from anybody. Because if you get $5,000 from a cousin, okay, the cousin is going to want their money back. So when a person wants their money back, it becomes a debt. Now, the reason why they want the bank statement to show proof of whoever giving you the money has the money to give is because they want to make sure that this person is not taking out a loan to borrow the money to give you to close. Because if they borrow a personal, say for instance, they get a personal loan from the bank, then this is the reason why they want a 30-day bank statement to show that they had the money to give to you. If their money is looking tight, then you're probably borrowing it. Okay. And if it's a loan from a bank, then it's going to show up that it's a loan from a bank, possibly. So then if it's a loan from the bank, a personal loan, then whatever debt that it is you inherited, because now we know that you have to pay them back. Want to reiterate on that?
No, I think you did it.
Yeah.
I think if there's anything to take away from today, take away the fact that you have Satanya, which is an ace in the hole for you. She's seen it, heard it, and knows how to address it. Make sure that you give her accurate information when you take that application. And any disputed credit cards or any disputed accounts, period, get those disputes off. Anything over $1,000 before you run credits, because again, that will cost you money in the long run.
I have a question, Denise. How do you guys view charge-offs?
Hang on a second.
Because, the history of charge-offs is normally the lender doesn't care about the charge-off because it's already written off by the debtor, the
Correct.
creditor.
And your credit score is going to reflect a charge-off. So any medical charge-off that you have is going to be excluded. So if you went to the hospital and couldn't pay the bill, that's going to be an excluded debt. So don't even worry about that. If you have other items that are being charged off, like you didn't pay your AT&T bill and they charge that off, it's already impacting your credit score, But what the underwriter, they're not going to make you pay it off, but that's going to be one more thing in their head to say, we're giving you $200,000 and you didn't pay this $145 phone bill. Should we really be giving you money? So just keep that in mind, that the underwriter, even though it's reflected in your credit score, they're looking at what you've done in the past to determine that you're going to make the payments to them. But medical collections, don't even worry about that.
Okay. Okay. Is there anything else that you may? I know that recently somebody gave me a call. They were kind of upset because someone left their job. Well, the closing date on the real estate contract mentioned one date. So in their mind, they had it figured out that this the day I'm gonna close. I'm quitting the job. Well, they didn't close on time, so they quit the job. Okay, and so when they did the verification of employment, now keep in mind, you guys gonna you, the processor, the underwriter, the lender, someone is going to call the job right before closing to make sure that you still work there. If by chance they say you no longer work here, then we can't, that stops the closing. So the person had to go get their job back. And I can imagine, it was some fussing going on. So they got the job back and now they can close.
Yeah, I guess that would be another thing. In addition to don't take out new credit, don't get a new job. And if you have a job that you don't work the same number of hours every week, that is variable pay. What that means is the underwriter is going to take an average of your income. So if you took a few days off because you wanted to go to Mexico and you didn't get paid for it, when they take your average, that's going to be included in there. So if you say, I always work 70 hours, but we have pay stubs that show you didn't always work 70 hours. You worked 58, you worked 70, you worked 62. That's going to be variable, and the underwriter is going to give you an average based on 12 months on what your income is. So just keep that in mind. I have people that have said, I can get a letter from my employer telling you guys that I work 70 hours. I'm guaranteed to work 70 hours, but we have pay stubs to show you did not work 70 hours. You took some time off, you didn't get paid, or you just weren't scheduled. They were slow, they sent you home. They're going to average your income, and you may or may not qualify. So just keep that in mind. You can't just say, I'm going to buy a house, so I'm going to work 70 hours for the next 6 weeks. And they'll think I always work 70 hours. It doesn't work like that. They're going to look at your year to date, and they're going to see that you didn't always work 70 hours.
So, and I always try to make sure that people don't take off of work. Um, I'd rather come get the paperwork or whatever it is that I need from you, or I'd rather run the errand. If there's something that's needed from the courthouse, I'd rather go pick it up for you. I try to make sure that you don't take off work for anything. Now, I understand that sometimes, you got to be there for the home inspection if you do a home inspection. Um, I always try to make sure that. And another thing that since I brought up home inspection, I want to kind of talk to you guys about homeowners insurance, home warranty. I've situation been coming about. I got a lot of insurance friends. They've been talking about how the rates have increased. Well, just like everything else, things are going up, right? So if you have a home warranty versus having homeowners insurance, if you got both of them, and you got $1,000 deductible on the homeowner's insurance, well, it's more common to go ahead and call the home warranty company and have them to send service people over to try to fix it. If they can't fix it, they will replace it. Now, if the home warrant, the hot water tank, okay, that's what I'm talking about. If the hot water tank is $700, there's no need to call the homeowner's insurance company because you got a $1,000 deductible. Okay. If you call the homeowner's insurance company, then they're going to consider that like a claim. By the time your homeowner's insurance is due again, your homeowner's insurance premium is going to go up, and then your mortgage payment is going to go up. Now, keep in mind, you're on a fixed rate. The only way that your mortgage payment is going to go up is if your taxes increase or your homeowner's insurance increase. It- I would, because the home warranty is not gonna, um, you know, it's not gonna hurt me in the long run. I would make sure that the home warranty cover a lot of different things like the air conditioning unit and the appliances and you know uh maybe the roof if it can. Inquire, ask questions, ask them what all that home warranty cover, because if it doesn't cover the air conditioning unit, ask them. Well, let me ask you this: do you guys service air conditioning unit or a roof or plumbing or this, that, and other? And they'll tell you, and they'll tell you what you'll have to do is do an add-on to get covered. If your home warranty does not cover those things, so I would rather you call and do the add-on with the home warranty than to see an increased bill your premium gonna be raised up to like $3,000 a year. Just think, divide $3,000 by 12. That's what the monthly payment is gonna be added to your mortgage payment. And once you file that claim and so forth, you can't really get out of it unless you shop for other insurance that is going to give you a more reasonable price with that claim. Okay. I just want y'all to understand that, because I know, you know, when you tell me, a lot of people like, well, I'm a first time home buyer. I want you to know these type of things after you close. You need to know these type of things. That way you don't, there could be money that you can be applying towards your principal so you can pay the house off faster instead of, paying an extra $300 or $400 toward insurance that did and when you didn't get any service from it. Okay, Denise.
Yes.
Okay. Did you and I'm gonna tell you guys something about the company that Denise worked at, PennyMac. I've you guys offer mortgage acceleration, helping a person pay the house off early and home warranty. I had a client that called me and told me that you guys offered all of that, and you guys called them, and you guys offer all of those things to them. They want to make sure that if they want to pay the house off early, they can be put on a mortgage acceleration. If they wanted a home warranty, then you guys have that department that you could attach to you guys offer all of that, Denise, that you know of.
We do. Through the customer service team, yes, you can do that after you close. Another thing that you can do is if you get a lump sum, like you're getting your tax return, you have to put a minimum of $10,000 down, but you can do a recast. And what that is you can take that $10,000, apply it to your principal, and then recast your payment. So your payment will be based on your new principal balance. It only costs you $250. It's cheaper than doing a refinance.
Right.
So that's another thing that you do have an option to do because we service our own loans.
Yes. I like that. And that's one of the reasons why I try to submit as many, and it's smooth closings, that's one of the reasons why I do a lot of business with you guys, because You guys are a really, really good company. You guys are set up really well to be able to offer a lot of products to the customer, and they don't have to spread themselves out with this company, that company, this company, and that company. You're offering everything that they need, and to make sure they upkeep the house.
Right. And you can also um, do what we call a hybrid close. What that means is the borrower can sign the majority of their closing documents before they get to the closing table. So when they get to the title company, there's only about 5 documents they need to sign. So it'll speed up your closing process. You'll be there for maybe 10 minutes.
Okay.
We also pre-fund our loan, so when we send your money over to your documents over to the title company, we also send the money. So you're not sitting there waiting for them to give the seller their funds and give you your keys. They already have the money. So as soon as you sign, they give you your keys and everybody's happy. Take your pictures, post them online so Tanya can get some credit, and everybody's happy.
And I have another question. Do you guys have the type of loans? And I'm gonna just kind of act like I'm a customer. Okay.
Mm-hmm.
Let's let's say I can't find the house that I'm looking for. Okay. But the house that I'm looking at has potential, but it needs work. Do you have a loan that can allow me to get the repairs done to that house as well? While I'm buying it uh, through the FHA is product.
Right. That's called the 203K. PennyMac does
Yep.
not offer that, but you've got other lenders in your database that do.
Mm-hmm. Mm-hmm. And normally what they do is have them to get a contractor and get a quote on how much it's going to cost to get the repairs or fix that
Mm-hmm.
room or whatever the situation is, to kind of get it to where you like. And
Mm-hmm.
but they add it to the sales price, but you're financing it.
Correct.
Mm-hmm. So, so if you guys, were just couldn't find something that you were looking for, just feel free that there are loans out there that can, if you see a house that has potential, but you don't like the floor, you know, um, you know, still, you know, ask me about it and I'll go, make a few phone calls and we'll try to run your file through, to try to get you to 203. That's what it's called.
Mm-hmm.
And so, because I have a client, she's been looking for 2 years. And I one day I said, you know what, she's gonna probably need to get that 203.
Mm-hmm.
Yeah, because I know she's, I hate it, but at the same time, I get it. Nobody don't want to just settle.
Right.
You want what you want. If you're gonna pay for it, you want what you want.
Right.
And I get it. I get it. So I just want you to know that there are loans that can, but keep in mind, you are going to pay it. It's going to be built into the loan. So it's almost like you're doing remodel work, as you're purchasing. Right? Right, Denise?
Mm-hmm.
Yeah. So do you guys have any questions? Did you guys want to elaborate on anything? If you came in late, keep in mind this. I kind of changed it up today because we've been running across a lot of. And I asked Denise to come on today, and let's talk about it because you guys are. If we don't tell you, you're not gonna know. So I just want to make sure that so you'll know what not to do, because in the midst of people talking, that was a thing in the past. We're in today's time now and things are changing. And once, the industry see abuse, then the industry come about, the correction. And this is the way of correcting the abuse that's been going on in the industry. They didn't like the fact that they were loaning bad money on loans. Some of those loans that they shouldn't have closed, but they did. And now they're correcting the mistakes that have been made in the past. So moving forward, this is the way it is. And I want to just elaborate on that. And we can talk about it some more, later on another date. But I want to make sure that I got that information out there because a lot of people have been giving out bad information, y'all. And this is what it has come to. You know, I've talked to a lot of underwriters today behind the scenes, and they work at other companies, so it's all across the board. They've been having big meetings about it. And Denise, one underwriter did tell me today. She said that if it said it's resolved now, she said that they could waive it, but she said that um, they kind of iffy on it. So, how do you guys feel about a dispute saying, but it's resolved now?
Then it shouldn't be disputed. If it's been resolved, they should remove the dispute.
Mm-hmm. Okay. Yeah. And she said they were 50-50 on it. And she said that if the file came back to them, because that's what the problem is, they've been having to buy back the loans. That she said that's one of the main things. So she said she just kind of have them to undispute.
Right.
Okay. All right. But so if you guys don't have any questions, okay. Do you guys have any questions? I forgot to have one. Um, if you guys don't have any questions, I am going to come back and we'll do the seminar. I just want to make sure that we spent time talking about this because there's a lot of information. I'm gonna be honest with you. Over the course of over the years, um, over 50% of the credit reports that's pulled have disputes on them. So I know that whatever information is getting out, however it was advised, people receive the information and move forward with it. So now, I'm just telling you that the lenders are saying no, we're not gonna do it. And if we do it, it's gonna be a downgrade, and it's gonna be a whole nother structured file. And when we wasn't gonna do the verification of rent, now we're gonna do the verification of rent. Now we're gonna hold you to a certain ratio. Now we're gonna, you know, this, that, and the other. So there's a list of additional things that come about. Uh, when a file has to be manually underwritten. Okay. And Denise, I know I want to say thank you for your time. You always there. You and a underwriter named Lois. I can pick up the phone and call y'all anytime. And you guys always come through. But I'm gonna tell you guys, Denise worked for a really good company. Okay. She's one of my top lenders. Okay. I go to that, but I submit the file to that company before I do anybody else. And we got 200 lenders. I'm gonna say this: their process is very smooth. Their company know what they're doing, and they're a really good company to have your mortgage with because they offer so many things even after closing. They really show you guys and have you guys with hands-on, information that you can just pick up the phone and call them and say, hey, I think I want a home warranty. Instead of going with another company. Denise, let me ask you, how does this work? The seller in the contract says, what if the seller say they pay for a 1-year home warranty? Could they not go ahead and get the home warranty through you guys' company, even in the process?
No, not in the process, but after you close, yes.
Okay, so what do they do? Tell the title company that they want the loan, want the, for them to hold the check until they can, after closing or something,
No, they would just contact customer service after they close.
and then they can call the title company and tell the title company and send the check to Penny Mae.
No, they'll work directly with the borrower at that point.
So
If it wasn't included in the closing, it's all done after the fact in our servicing department.
okay. So I was just wondering, how could they go about doing that? Because I know that you guys are going to offer them something that, and they're going to make them get to it, just in case if there's a problem,
Yes.
because I know a lot of people have problems sometimes.
Yeah, they just need to reach out to customer service after they close.
Okay. So I will be notifying you guys when we do another one. Feel free, if you have any questions, feel free to give me a call tomorrow and say, "Hey, Satan, y'all was talking about this, and um, I didn't. Can you tell me a little bit more about that?" Feel free to give me a call, because now's the time. I'm gonna tell you, no question is a crazy question. This is something that, hey, that they put on the table, and now we are having to move forward with what they put on the table. It's their money, and hey, we just want some of it, right, Denise?
Right.
Okay.
Well, I appreciate you guys having me today. Thank you so much for your time and attention. I apologize for our technical issues right away.
Thank you. Thank
I
you
hope
so
you
much.
got something from it, and thank you for inviting me, Satanya.
You're welcome. You're welcome. And I'll be giving you a call tomorrow, Denise. Thank you so much for coming.
Okay, you guys have a good night.
All right. Bye bye. So, you guys, Denise is so awesome. I'm gonna tell you something. That company is a really good company, and that's one of the first companies that I seen you guys to, for several different reasons. Because for one, they're smooth process. They know what they're doing. They got a very structured company. For another reason is because they have a lot to offer you after closing. And if you want to pay the house out fast, they got that in place. If you wanted to get home warranty, they got that in place. If you wanted whatever changes, it's not difficult to make. And they're just available for you. And so, once again, you guys, um, feel free to give me a call tomorrow. I'm gonna put in my email address on here just in case someone come on and have a question. So, before we go, do you guys have any questions? Any? Did anybody want to talk any more about the 203 loan? Where you do the home improvements, let's say you found a house that has potential, but you don't want to make an offer on it because it's not what you want. But if that floor was different, if that, okay, if that if that's, that ceiling looked a little bit different than you would want it. But if you guys don't have any questions tonight, okay, I'm gonna come back on next week and we're gonna talk about another topic. And hopefully we don't have technical difficulties. But if we do, I'll just crank up the YouTube live and start all over like I did tonight. I am gonna sign off by saying good night, you guys. You guys have a sweet dreams. Say your prayers. Be safe. There's a lot going on in this world. Be safe. Pray for your family. Pray for your friends, and pray for you to get that house. I'm signing off, y'all. Good night.